How likely do you think the debt hike due to the large amounts of budget needed to tackle the impact of the COVID-19 to our economy? Will it be another risk for Indonesia's investment grade to stay in the negative outlook?
Sure. So I think that the current debt level is well captured at this rating level. We're seeing the gross debt just above 40% of GDP on a net basis, which is an important metric for us. It's right around 40% of GDP. In our opinion, it's really quite likely to stay around this level for the next 2 or 3 years. This is already incorporating the higher fiscal deficits, around 5.7% this year, perhaps somewhere between 4.5 and 5% of GDP next year as well. Now, one risk I do want to raise, though, with regard to the debt settings in Indonesia would be the interest payments that the government makes on that debt relative to its revenues. Because revenues fell really quite dramatically in 2020, we will need to see a healthy recovery of those over the next couple of years so that the interest payments that the government's making on its higher debt stock start to come down as a proportion of its revenues on an annual basis.
Okay. Andrew, as you know, so far that we have spent more than hundreds of trillions of rupiah trying to reduce the impact of the COVID-19 to the economy. But in your point of view, how effective do you think the Indonesian government fiscal policy to overcome the pandemic and to also to impact the Indonesia's economy in the future?
Sure. So I think, one interesting development that we saw last year for Indonesia was the fact that the economy shrank and it was a very difficult economic performance, of course. But the contraction of 2.1% in real GDP was generally lower than what we saw in other emerging markets, and especially other emerging markets in Southeast Asia. And to some extent, I think this speaks to the government's approach to managing the virus domestically. Especially in the second quarter of the calendar year last year, we did not see extremely strict measures compared to some other economies, for instance, the likes of India or Malaysia or the Philippines. So the economy did not shrink by nearly as much in the second quarter of 2020 as in those economies. Now, these fiscal measures that you mentioned have certainly also played a part, right? They have helped to mitigate the impact of the economic downturn on the most vulnerable segments of society. We've also had a corporate tax cut, which of course helps the larger companies in particular to continue to employ folks and to do a little bit better. And this is going to be permanent. So over time, it's going to make the corporate sector a little bit better off financially and perhaps a little bit more competitive too in attracting foreign direct investment into Indonesia. So that's an important development in Indonesia in our opinion too. But essentially, we do think this has had a mitigating impact. Nevertheless, the hit to the economy has been significant, and we think the recovery is going to take a couple of more years.